Aloha, everyone. Welcome to Java on Thursday. It's August 17th, 2023. Thank you all for joining me for another day. We've had a couple of very interesting days in the markets. Want to go over what we are expecting today. The Labor Department will release their latest jobless claims data. We're also expecting Walmart earnings prior to the market open, and we're going to be looking at them towards not just retail, but also they have that large sector in grocery. So I expect them to do well, and we'll keep an eye on that. As you can see, we've got some extremely high risk going on. The MMRI is our favorite kind of combined indicator here to watch, and it's clearly in high territory. Things are very unstable. On that, we're watching the 10-year yield. It has risen, and it's okay for it to rise, but the instability is going with everything else going along with it right now. So I think that we're primed more for a black swan event will more likely occur when things are unstable. It's a lot easier to knock it off its course, so to speak. So I've also got the Dixie is the relative strength of the US dollar, and are showing that is still high actually at 103.32. But I've got a couple of more charts up here, different today. So we're showing the markets are in the red. However, I expect them to go a little bit green because we hit below a key level on the NQ, which is kind of, it's for the NASDAQ basically. And we went below 15,000 for it. So now I expect it to come up and try to test that resistance from the bottom. If it hits about that 15,000 level and cannot break back through it, then I expect the markets to continue the trend and hit lower. We are definitely in a trend, although the futures are also showing that they are looking towards green at the moment. And we've got silver and crude oil particularly recovering a bit. I think it will still. We got some very shaky stuff going on right now. A very trembling market, kind of like Jello shaking. So I put up here the Asian market because we've been watching China with their extreme weakness. And Singapore, in contrast, has a lot of strength. However, China itself is just showing it's kind of bleeding off right now. We've also got cryptocurrencies under pressure, and Bitcoin fell below that 29,000 level. So, unless it regains above that again, that will also, I expect, continue downward along with the equities. We'll see what happens. It's not financial advice. I don't know. Nobody knows for sure. That's just what I see as the most likely probabilities for the numbers that I am seeing. So let's go on with the stories that we've got for today. I don't have it in here, but the Dutch economy just entered a recession, technically. So they've had their second quarterly basis where their numbers dropped. They are the Eurozone's fifth largest economy. So this is significant. Something else to watch. So between what has happened with Germany and now the Dutch as well, it's significant. Okay, so we are watching this. She's from Edward Jones, and she's saying that we're in a controlled market pullback right now. And it is, it seems so. It's not that shock and drop. And this is all by design, but we know this. So the Federal Reserve minutes that came out said we've still got our inflation is too high, still a threat. So that opens the door for them to continue to raise interest rates. And so that's part of why our market is bleeding off a bit, because everybody's talking about how they're going to cut. So CNBC saying inflation and interest rates might go higher. Yes. So we may have that period of what people are looking for is a severe deflation, but more inflation and keeping those interest rates high is kind of baked into the pie. We know this is coming for the long run. Inflation, this is just something we are watching going forward. We already know. So we're watching our friends across the pond, so to speak, in the UK. They're facing their nightmare inflation scenario because prices are high, they cannot afford anything, but their unemployment is increasing as well. So they're they're experiencing that crush that we are expecting to happen in the US. It's just happening slower for us. And one of the reasons why it's happening slower is because our homeowners are tapping into their home equity. So this is kind of a hidden source of value that JPEL is trying to kind of wring out of the market right now. So homeowners are kind of taking loans against their house, their second loans or home equity lines of credit against that value, but values are staying high. As soon as the values in the homes drop, that will be a problem against that debt. And this is also people borrowing against this means mortgage balances are staying high. So if the loans to the value of the homes are staying high, when they begin to come down and correct, is what caused what happened in 2004 to 2008, that issue. So this is what I had brought up about the Dutch economy going into recession. And so we're all on a comparison basis with other currencies for our relative strength in our dollar. So we're watching the US dollar to remain the global currency. This is from BRICS. Basically, they are having their meeting on the 22nd. And they said basically what they are kind of the same thing I said. They're looking to trade in their local currencies, looking for something to kind of tie it to, but they are not, even though they are de-dollarizing and moving toward it, they've got a long way to go. They still hold a major part of our debt that we have exported our inflation to other countries for years. So it's going to take some time. So for now, it is still the cleanest dirty shirt in the pile. So the dollar is going to maintain its strength for the moment. And we've also got this other story that hit China's major state bank selling dollars for yuan. They're trying to control their inflation situation right now. Deflation, they're having serious issues, no loans with their banks, not making their payments. So they're trying to recover as quickly as possible. And they have a different social situation than the United States does. And they're warning that they will come out of this. So we're keeping our eye on what is going on there. So time for lava updates. My question, and I want to know your opinion. Please put it in the comments. Do you think the four horsemen are coming? And this is, you can already see this right here, what we're getting into. These two stories coming out, they're trying it again. Wasn't just great at first times, they're trying it again. People have the cough, spreading things they shouldn't. And I don't mean just misinformation, but they've got a new variant and they will use this again. So these stories coming out, we know what that means. The other one, war. When I can't do that, things are ramping up several places, things getting a little hot. But along with that, because war is big business, and this is this ship that wasn't even out to sea for a total of 5 years before they're icing it. So $362 million, and they're already taking it off. So it's just one more way for them to continue to spend. Inflation will increase as we move forward. So yes, so the Federal Reserve admitted it, and of course we will be inflating more. So hopefully you like something in here. You would give me a thumbs up. If you have anything to leave for me in the comments, I would really, really like to hear what you think about any of these issues. With that, I need to let you get to the markets. So I wish you all a green trading day or just a wonderful day in general. And until I see you again, my friends, stay free.